This is, we have a trade group. You guys are probably VIP already if you're here. Let me pull this over to the side and give you a good morning if possible. Guys, it's London. You guys know, former hedge fund owner. Let's see what I can do with this. Working on this. There we go. It's London, former hedge fund owner, private, non-SEC, not financial advice. Guys, let me know when you're in the room. Few details, setting back up some different computers. And we posted some know-how last night in terms of some different connectors for you guys to get the 4K displays or your multi-array displays for your charts, right? I try to come to you in the mornings so that we can stream at least the open, see what New York is going to give us, if there's some volatility in the works. And I'll just put good morning in the chats. We will be replicating this experience on VIPTrader.com. We're in the process of doing that right now. I want to say good morning to Venus. Definitely good morning. This is when we get together. So we'll be replicating this process on VIPTrader.com. We're integrating right now Amazon Chime, which is going to allow us to have a screen share, video conference, some different abilities like this. So we may be moving some of this over to VIP Trader, which again, if anyone, and Venus, I'll let you, we'll talk about that in terms of when to actually start putting people in VIP Trader. That's exciting. Let's dig into the charts as we're a few minutes away from the open in New York. Let's take a look at it. I may, let me see if I can bring this over just a touch. There we go. Let's look into the charts on Bitcoin. Let's look at what we're currently dealing with, challenges. Let's talk about what the bulls are up against. And today we're going to talk a little bit about fortitude in the market. We got some new faces in the crowd. Hello, how are you? You're welcome to be a part of our trade group. Top level membership is VIP, access to the back, trading indicators, etc. Now, in terms of the market, I want to have a real frank discussion with people today. While Bitcoin is up, we're in a bullish pattern. You guys see, this is technically a bullish pattern, all right? The market, and I'll just let's shout out right now to Chris in Australia. Chris has been in the markets. Pay attention to this. Chris is VIP. He's been in the markets for a period of 20 years, 15 plus years. I want you guys to realize when you look at a trader like Chris, and Chris, shout out to you in the land down under. Hope you're doing well. He's VIP. And what I'll say is the following. When you look at the level of fortitude required to do well in the market, everybody, and this is important as we just talked about this morning. Scotland in the house. What's up, Scotland? This is a good word this morning. As you look at the fortitude, I tell you, we can talk about the quick fix pattern, what we have going on the screen. We can talk about that. Bam, what's the answer? Everybody wants to trade the answer, right? You want that. I want to remind you on the screen right now, I see Chris, okay? Chris, right there on the screen. Guys, he's from Australia. He's VIP. He's been in the markets for 15 plus years, okay? So when you show up to the market, I'm just going to tell you, when you show up to the market, and this is true with Chris, it's true with New York pro traders, when you show up in the market and you're all eager, you're going to beat the market. You're going to take this pattern. You're going to take the next trade, and you want this quick answer. You've been in the market for maybe a year, maybe 2 years, maybe 3 years. Maybe you've been in the market like around 4 or 5 years. Remember people like Chris, VIP. He's been in the market for 15 to 20 years. So literally, he has seen people who want quick, easy answers. And you guys know this, who want quick, easy answers. Come in and out of rooms and markets for 15 plus years. So when we approach, and just wrap your mind around this, guys, this is a good discussion, believe it or not. When you approach beating the market, when you approach the skills that you need, I want you guys to do it a little bit, and shout out to Amos. What's up, Amos? I want you to do it a little bit with the frame of mind that this process takes time. Bottom line, the process takes time. And I tell you, in terms of, well, everybody wants the next 1,000x coin or the 10,000x coin. All right, great. Well, you know, what do we say? Manhattan, New York, Manhattan, Beverly Hills, Monte Carlo, okay? These ritzy, first-class spots in the world, what are they not full of? They're not full of people who found the next 1,000 and 10,000x coin, right? There is a rare function of, well, we want to fund this big producing investment. Maybe you'll find it. We have, I can say there's a hit rate, just so that you know, in terms of the quick, easy, I'd say gratification that people are looking for in the markets. And it's important, this popped up for us. And in terms of the pattern that we're in, let's just identify the pattern, then we'll continue to talk about this issue. But I know VIP, you understand this. When you're looking at beating the market, when you're looking at trading this pattern, it's a great example. It's a great example because this pattern here on the right, we call it a bell formation. We just do. We like to rock these, boom, to the upside. Bell pattern formation, the expansion, increasing volatility, level of support, level of resistance, right? Now, the all-in mentality, the quick fix, easy answer is, you guys know, well, it's a bullish pattern. I'm getting in right here. We got to make some money today. Guys, I just bring this up today because I want you to see yourself 5 years down the road in the market. I want you to see yourself like 10 years down the road in the market, all right? And if you can't develop the patience, and Luke in the house. What's up, Luke? Nice to see you. Let me get a sip of coffee real quickly. Luke, VIP for a while. Long-standing VIP member. Cheers to you, Luke. Nice to see you, brother. Luke knows. Luke's been around VIP long enough to know and see the quick, easy fixes, and those guys come and go, without a doubt. You don't want to catch Luke, I'm going to tell you, in a bull market, the guy with pattern recognition. But how did he get like that with pattern recognition? I'm telling you guys, you watch Luke with pattern recognition and cross-asset pattern recognition. Unbelievable, okay? But he's put the time in, right? Definitely a huge benefit to have you around, Luke, and just a pleasure. We can't wait to get you in Scotland in the house, to get you out to California. You guys, we have HQ here. And I talked to Luke because Luke and I have jabbed back and forth quite a bit. Open standing invitation. You guys contact me. I want to know who wants to come, right? Scotland, you've mentioned it as well. VIP in the house. We have a beautiful headquarters here. I mean, in La Jolla, guys. It's rock and roll. Plenty of space. We don't want to cramp VIP or London style. Guys, the style is, it's not cramped. Bam. We're excited about having you guys out here. Shout out to Luke. Good morning. So, and it's one thing to say it, guys. It's one thing to say it, but when you're able to appreciate somebody, and I bring up Chris, who's been in the market for 15 years, you know, you have to understand the quick, easy answer and solution, that mindset that I want it quickly, I want it now. I need to do this now. I need to trade now. I mean, this is let's start this off. If we were going to go to a multi-pronged problem in terms of the approach of wanting the answer right now, and we're off into the races with New York equities. Just talking a little bit about the mindset. Now, Chris, the 15 to 20 year, guys, pro-level trader, come on, he's been in the markets for 15, 20 years. You guys see his charts in the back, like, hey, okay, guy knows what he's doing, right? You know how many pro-level pros he's learned from? That pro doesn't know what he's doing. You guys know in 20 years? Imagine. And the issue is this. When you're looking for the right answer, quickly, you want the market to do what you want it to do. You need the answer up or down. Guys, what are you going to do? You're going to show up and immediately, you want the right answer, you want to get into a trade. Yeah? You want the right answer, you want to get into a trade. And that's one of the most dangerous things that I see traders do, guys. In terms of VIP, you know this. But that mentality of not having patience, the mentality of when I say something is a bullish pattern, and I draw something down like this, and I let you know, you guys know, there are other indicators to always work with in terms of, I'd say oscillators. Definitely, indicators, yes. But to work with, and what does this take here? Well, it takes some time. What is there? A level of uncertainty. But I need the answer now kind of mentality. You guys know give it to me quick. Give it to me quick, boss. You know, you imagine we're on New York floor, like, give it to me quick, boss. What direction we going? I'll go hit the button and we'll make money. Guys, just level into a bit the fact that your trade may not be immediately on the screen. You need to be understanding, I'd say, of the process enough and patient and diligent enough to realize that one of the worst things I see traders, and you guys know this, but it's the trader who shows up and wants to trade. Like, whoa. You show up and you want to trade. It's that I need the answer now. What direction is it going? It's that rush, guys. And so I bring up Chris. I want to just introduce this idea to you if you have never had this idea introduced to you. The importance of patience. Guys, the importance of understanding your accumulation levels, your target levels. If you're not prepared to operate as a bull at lower levels, you're skunked, you're gone. All right? If you are entertaining, pay attention. If you are entertaining exposure in the market, bullish exposure in the market, VIP know this, huh? You guys know this, but it's good to hear it, right? If you're entertaining exposure in the market in this level, right, the 21.5 to 24.3 of Bitcoin, and you are not fully prepared to operate, just pay attention, guys. You know this, but if you're not fully prepared to operate at lower levels, if you don't have cash reserves, yes, if you don't have cash reserves, it's one of the most annoying things for all of us to deal with. You guys know that, because someone will come in, they're not a player. They have no contingency plan. Literally, they're already headed out the door. You guys know this. Anyone who doesn't have cash reserves, some system in place to facilitate, and guys, this is a big distinction, okay? VIP, you guys know how we are. You know heavy cash reserves. You know light exposure. Until what? Until you can book 4 positive trades. And when you can, through repetition of your trades, book 4 positive trades, guys, the whole world changes. I'm telling you, the whole world changes. You guys know that? When you can book 4 positive trades, the whole world changes. The whole world changes. What do you mean? I mean, like, your cup of coffee in the morning changes. When you can go book 4 positive trades whenever you want to, your cup of coffee in the morning changes. Not a better cup of coffee, maybe a different cup of coffee. But you know that you can go pick up a cup of coffee any morning, guys. And you can go book 4 positive trades. Now, with where you're at right now, if you drink coffee or otherwise, make it a Coca-Cola, whatever you need to. But I'm telling you that consistency, as we look at a pattern that we love to trade, and we're giving it some time and we're talking in VIP, right? If you're at the point that you love going to get your cup of coffee and you're fully confident 110%, I can book 4 positive trades with my cup of coffee, no problem. Hey, that's what we want to get to. If you're at that point or if you're not at that point, recognize the following. If you fell into the category just now in the example, okay, no, I can't go get my cup of coffee and just automatically book 4 positive trades. I can't do that. If you found yourself over in that category, what does it mean? That the amount of your trade needs to be small, okay? I'm telling you, just based on experience, based on VIP know-how, what we see work in the market. When you can go get your cup of coffee and you're positive 100% that you can book 4 positive trades, maybe two cups of coffee, right? Maybe during breakfast, 2 cups of coffee, something, let's say cup of coffee, right? Very good. If you fall into that category, you know, I go a little heavier here. Yeah, we can up it a little bit. And you're speaking with a position of authority, right? You know that you have a commanding presence in guys' interaction with the market. There's nothing like that. If you're not there, you'll get there. You can get there. But you're not going to get there with too much exposure. You're just not. I've never seen anyone get there with too much exposure in the markets when they're inconsistent. And guys, a lot of it's the same effect that we started talking about in terms of people looking for the right answer real quickly. They want to inundate themselves with all the wrong answers. The right answer, guys, New York Institute of Finance, yeah. Tom Bolkowski, Encyclopedia of Chart Patterns. Yeah, absolutely, huh? Incredible guy. Absolutely incredible guy. Tom, if you're listening, it means a whole lot. I'm just going to say it means a whole lot, just who you are to everybody. That's it. That's all I'll say about that. Thank you. I'll say a big thank you, Tom. Appreciate it. Real good guy. Encyclopedia of Chart Patterns. You guys know how much work Tom has put into the markets? My gosh. Imagine you people show up in the markets. Think about this, guys. Tom Bukowski has literally gone through the last 4+ decades. You say you're going to do a back test of the last, this is a good talk, guys. 4+ decades. Let's look at what the equity, things are a bit red. We started futures a bit off. Looks like we're still, overall equities are a touch off. So Bitcoin in that dynamic as well. But understand that investment that Tom has made in the market of himself. Unbelievable, isn't it? As we get a little anxious and we get a little, what's our concern here? We talked about this just to update the technicals. But as we start to get anxious, as we start to want the right answer, like now, I kind of deserve the right answer now. I put in 2 hours. I mean, I looked at my chart for 2 hours. Yeah, right? Tom Bukowski has put in countless years, okay? And in terms of research, decades of research on 150,000 patterns. Whoa, guys, whoa. If there is any kind of like street cred, meaning like Wall Street credibility, tie goes to the winner. What would we say? Like there is no tie. He's the clear winner, right? We're in a different league. We try and assemble that information, right? Competently, intelligently, process it, and use it to our advantage respectfully. Respectfully. Somebody puts together a book like this. Pay attention, guys. Somebody puts together a book like this. I mean, come on. A book like this, 1,200 pages. Look at this, guys. You're going to put together a book like this, 1,200. And guys, this is not, go get all your other materials. And then look at this one, 1,288 pages. Encyclopedia of Chart Patterns. Okay. Almost 1,300 pages. Full of 40+ years of diagnostics in the market on chart patterns. Guys, so the purpose of this is to reinforce the following, that the market does not reward, very rarely rewards the impatient, the demanding, let's say traders who want the answer now, who have reached their threshold and their limit and the market's not producing for them right now. So they're going to just move on. It's been 6 months to a year. They're just going to move on. You know, the trader shows up and he wants the right answers. He wants to be told where the market's going, and he doesn't want to do the work. I mean, would you guys want that kind of a trader to be successful? I'm just curious. You meet some guy like that, and he shows up in 2 months. He wants to be successful. He's expecting to double and triple his account, probably at least once a month. What? Joker, huh? Absolute joker. You guys know this. So I'm bringing this up because VIP have a history, right? We have a history of hard work, diligence, intelligence. You guys know in terms of what it takes to beat the market, it requires a long-term plan. It just does. It's not what can the market give me this week? Yeah? It's not this is a bullish pattern, and when we start that, it's like, this is a bullish pattern. You know you're going to find on another time frame a bearish pattern. What cuts across that? What cuts across? The best that we can, guys, cuts across the time frames and the mixed signals that you get. Okay? This pattern right here. Expansion. All this is, guys, whether or not you call it an expanding, descending, broadening wedge, or you call it a bump and run. I'll go through the differentials on that. But understand, this pattern, okay, we'll say next to some diamond formations. But in terms of the percentage probability that you're going to operate with, this pattern is like King Kong. All right? It's literally, this is a heck of a pattern to focus on. Now, the quick, easy answer guys, they don't even understand that. You guys know, the quick, easy answer guys who just tune in for 2 seconds, they don't even understand what you're talking about. Where's the bull flag? Where's maybe the ascending triangle, right? A rising wedge, a falling wedge. It's interestingly designed, isn't it, guys? You have to admit, for VIP, you have to admit, it's an interesting setup, isn't it? Because it's not a popularized. You're not going to see this pattern on a billboard necessarily. It's not front and center in everyone's focus. But the guys who have spent the most time with the markets, guys, the ones who have spent the most time with the markets in terms of the pattern recognition, This one is really, really something you want to focus on, and we know that. Still, there's a challenge. Still, it's going to require some patience from you. It's going to require somewhat of a long-term plan. You guys know this. Still, it's going to require, and I say long-term plan, but it's going to require you to be able to operate at lower levels along the support. If we break the support on this level, all the better. You guys know that, all the better. And between the tricks, just call it of the trades, right? The tricks of the trades, etc. Let's just review very quickly for VIP. You guys know one of the other strong features that we have focused on, kind of a blackjack pattern, right? You guys know this. And it comes from the probabilities as well, as you would look at a descending triangle. Let's look at a descending triangle that would break down. Now, most people look at a descending triangle and they only think what? The quick, easy trader, he wants what? Well, he wants to trade the breakdown. We get interested, okay, underneath descending triangles. There's a pattern probability in terms of, I'm going to say this, a completion rate to the downside, either half of the amplitude or 100% of the amplitude. All right, and some people will say, no, it is the correct answer would be the 100% of the amplitude. All right, go test it. Go test it. How many patterns reach 65% of the amplitude? How many reach 75%? Let's say 86, the classic 86 Fibonacci, right? So it's 50 some, guys, the golden pocket. A number will reach the golden pocket in terms of the target. So looking at this rebound play, we have grown to really, boom, appreciate descending triangles while, and pay attention guys, how is NASDAQ, huh? We've been enjoying watching equities kind of go through a bit of a settling, maybe picking up some orders, then continually just boom, 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 wanting to just, cruise higher. It's been nice. And getting used to that in terms of, and we should pay attention because we're getting used to that, right? Equities being a little challenged in the morning and then boom, 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 boom. Yeah, so when you start becoming accustomed to something, psychologically pay a little bit of attention. Microsoft is doing well last couple of days. You guys see that? Not bad, just noted. We trade Bitcoin. Now, looking at the framework here, as we make some distinctions about who we are versus, not the Johnny-come-latelys, not the in this week, got to make some money, and I've got stuff to do next week, whatever it may be. Guys, the market tends to reward the people, and guys, if I started listing names, you'd be like, okay, all right. You guys don't know, though. You see somebody, a whale or otherwise, you don't know how much time they spend in the market, guys. I can tell you firsthand, you have no idea how much time they spend in the markets. I need to tell you guys that 100%. I need to tell you guys that. You see a whale. Oh, that's easy. Oh, that guy has a lot of money. Oh, that guy's done well. Oh, he got in early. This and that. You guys have no earthly, humanly, possibly ability to understand how much time those guys spend, some of those guys, and you know some of the names, how much time they spend in the markets, guys, you have no idea. So when you're competing against individuals who are just in the market the entire time, and it's not that you have to dedicate your whole life to it. It's not that that's the solution either. I'm a huge fan. You guys know me. How do we get to the point where we can book for positive trades, right? I'm going to say this. My prior, hedge fund, 8 to 12 seconds. That's it. 8 to 12 seconds. Average trade. That's it. Okay? The work that goes on around the 8 to 12 seconds, yeah. That's the question. Okay? The work that goes on around the 8 to 12 seconds. So, and I bring this up to talk about the following. You guys know, former hedge fund owner, private, non-SEC, not financial advice at all. Get your broker. In terms of the pattern, descending triangle, the whole market is looking to get involved here, right? Short. We're looking, boom. We're immediately looking at a target, bam. You guys know. Stop loss, nice idea on this, huh? Stop. There is a percentage, maybe 25% chance. You guys know, 25% chance that this overperforms, that it outperforms the downside. Yeah, and we'll look at those figures as need be. But while the market is thinking, guys, it's the difference of spending a little bit more time in the market. A trick, let's say a trick of the trades, right? a little bit more time in the market and you start to say, wait, hold on, descending triangle, so everybody's about to go short. I'm going to look at the probabilities of entering below, try and catch this for what we would call a blackjack. Why do we call it a blackjack? Because we have a double bottom, okay? The bottom support of the descending triangle is what? 2, all right? 2. Double bottom. Single pass through. Bam, okay? If we can get this double bottom, single pass through, we call it a blackjack move in the back. VIP, you guys know that. It's because there's a double bottom. And this single pass through, we would call this a pullback, right? And we'd like to see this launch, bam, to the upside. So those have been successful. We'll probably do some sort of I'll do an infographic on that for you guys as we lay out kind of a structure for, you guys are going to see. I hope you like the website soon. We said last couple of days we'll put you guys in there, no problem. It's just it's going to be a little bit of we're going to have to get that car running. It's going to have to be a well-oiled machine, but we're excited about that. It's ready. The editing team is literally fixing the sentences now. So hey, finally, big project. Got to stay on top of those guys building it. I'm just telling you. So I bring this up, okay, in terms of the double bottom single pass through, because I guarantee you, I promise you guys, you know this, there are orders stacked. And I say that as a matter of fact. There are orders stacked in this level. You guys know that? Due to the nature of this double bottom, we talk about this all the time, that would be a beautiful move, right? It would be a beautiful move. Now, when we talk in terms of possibilities, we talk about, well, maybe it could go here, maybe it could, forget that, right? We dig into the micro. You guys know this. We dig into the micro. I let every trader know, and you guys know. You want the answer in terms of where something's going. Okay, start with the 5-minute Bollinger Band 20 moving average. The 5-minute. And this is the answer that people hate. The guys who have been in VIP and the guys who have been in the market a while. Shout out to Chris again. What's up, Chris? Use you as an example. If you're just tuning in, thanks for letting me use you as an example. But as we would look at the, and I don't even know what time it is in Australia. You guys can let me know that. But I think Chris is up. But yeah, if you're just tuning in, Chris, we use you as a great example and just some solid commentary about not the quick, easy answer is the bottom line. Chris will understand the following. Chris will understand the following. As we deal with, and VIP, you guys know this, it's just the truth. You're never going to make a major move in the market. I mean, ever, period, ever. Are you going to make a major move in the market to the upside or the downside without what? Without crossing the 20 moving average on the 5-minute time frame. Period. Now, either you've already crossed it and you're holding above and you're going to skyrocket, or you're going to cross below that 20 moving average on the 5-minute time frame. Yeah, now you could say the 1 minute, the 30 second, you can get into all that. But the 5-minute is a realistically almost large time frame. As you guys start digging in, and you guys know this, as you start digging in, I'm on the 1 minute, I'm on the 30 second. I see guys on like the second. I'm like, whoa, just, frame back at least like 5 minutes. What's the 5-minute telling you? Those are the types of answers that people don't want. They don't want them. They want to trade. They want to say they're traders, but they want to set up their trade. You guys know, they kind of want to set their trade up and be right about what's going to happen next week. With Zelensky talking at Westminster today, being hosted today in Westminster. They do. They want to be right about, I'm just telling you guys, they want to be right about how Putin is going to interface with or not oil potentially in the next 6 months. It's that dynamic. So when you're looking at something, right, if there's a push-pull at all between bulls, between bears, and it just, as we boil down into this, guys, as we look at this, as we look at the cross on the 20 moving average, it's trading. It is trading. It's tight. Right now it's a little tight, but you guys see this. Look at this. Up and over. Bam, 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 bam. Nice channeling. Nice. You guys see this. Now it's not, they're not big trades, but look at this. Some of these hits right back onto the 20, they're tight. You almost have to have, and you guys explore this on your own to the extent that you need to. Some exchanges won't let you trade that tight in terms of a 0.06. Some will, okay? They'll let you trade it for if you're going to look at a commission, right? if you're looking at your spread and your commission. And we'll do some work on this over the next couple of weeks, okay? We'll do this over the next couple of weeks as we see Bitcoin just rounding out. The new indicator, I'm excited to bring you guys this new indicator. Capital line, it's gonna be the capital line. Cap line, which is intended, you guys can see on the bottom here, I'll go through it just a bit, but you can see the capital line is going to be an expression. Let me make sure that we get this show cap line only. That should update. Sometimes when I stream, it takes a little bit of time. But it's going to be directional, okay, which is nice. You'll have a gauge of volatility, okay? You'll have a gauge of volatility, and it'll be directional, okay? So to the extent on the cap line, for instance, on the 5-minute, never to be fully relied upon. But you'll see this curve over into the red. You see this, which is confluent with this drop that started to occur right in this area. It happens to match up in this instance with the 20 moving average. You see that. Happens to match up with the 20 moving average. And you can see, you can start to kind of question into it as you would start to see one of the most impressive parts of the cap line. And I can explain to you what it is. It is a kernel regression. It's a kernel regression weighted moving average, okay? But it's a kernel equation, okay? Which is measuring, let's say based on, or let's say it's the result of the measurements of the volatility, okay? Based on standard deviations. If you understand Bollinger Bands, what are Bollinger Bands? Well, the top band and the lower band. They're centered around a moving average. Let's pay attention to this real quickly, guys. They're centered around a moving average, that 20 moving average, okay? So what we can do here, I don't want to mess this up. Hold on one second. What we could do, instead of having, and pay attention, guys, this is good for VIP. Pay attention. As we're looking at a Bollinger Band equation, the Bollinger Band measures standard deviation of 2. It's a computation, standard deviation of 2 on either side of the moving average. You guys know this. Now, what have we done? Well, I've created this. I want you to appreciate conceptually what you're looking at on the bottom. What are you looking at here on the bottom? These are hits. Let me go ahead and identify the level 2 along the bottom. Okay? Let's identify level 2 along the bottom. I'm going to put this on this scale here, this white line. This is the Bollinger Band on top at level 2. Okay? You're going to see that here as this line right in here. Okay, that's going to be, and actually that's 1. So this would be 2. Now understand, what I've done is very interesting. It's not unheard of, but the way I presented it is different than what we've seen anybody do. Okay, looking at the standard deviation of 2, you know that that's a target. 95% of the price action, 95% of the price action will be within the second standard deviation to the upside and the downside. So I became curious and wanted to know, well, that's fine. In terms of 95% of the price action, great, but what about when it overperforms, right? That's when the Bollinger Bands seem to fail, don't they? They really seem to fail. And so beyond the standard deviation of 2 measurement, we started looking into, and I started computing, well, I want to know what this hit was. We can go to the Wix if we need to, but I want to know what this hit was. What was that standard deviation? Because I bet you someone out there was targeting already with orders waiting at that level of standard deviation, right? Instead of the Bollinger Bands with just a 2, right? A limit on the top of a standard deviation of 2, and then guys on each side of the moving average. I bet there's someone out there who's targeting, let's say, the standard deviation 4. And has orders parked up above at the 4th standard deviation, ready to execute on a short. Boom. Yeah. Or 5 or 6. Right? Instead of just the 2 on Bollinger, I bet someone's up there waiting on the 5th standard deviation, above and below, ready to catch the volatility. That's what Bitcoin's all about. Right? The spikes, bam. Are they going, what standard deviation are they going up to? If they're powering through the standard deviation 2, typical on Bollinger Band, where are they going? All right, so this is what this indicator is going to provide to you visually. It's going to provide to you visually that answer, and taking a look at the hits into, and just pay attention to this, paying attention to the hits here in these higher levels. Now, on the right-hand side, I have on the scale the 4, the 5, the 3, the 2, the 1. Those are all standard deviations. So the Bollinger Band by nature is parked at 2. But we know it falls apart, right? Because many times we'll see price action go beyond the Bollinger Band. So what standard deviation level is it going to? This will allow you to fully view it. This will allow you to look back in time. As I were to stretch this back over on this screen, you'll see on the left-hand side here, bam. This allows you to look all the way through back in the price history. It's cool stuff, guys. And see, okay, how many times has Bitcoin hit into, or whatever you're trading, okay, whatever asset, whatever stock, whatever anything, how many times have we hit into the 5th standard deviation, right? Very, very critical. And as we look at some a nice rollover for BTC, nice rollover. And again, guys, looking at the cap line, and the cap line is behind these measurements of volatility. But see, you're starting to see in VIP, you guys know, we've been talking about it in the back, but this is cool stuff. Do you see these hits here? Boom. You see that hit? I always recommend this on a big screen TV, guys. I always recommend so you can see the technicals because they are technically oriented. You see the hit here. Now that's way beyond the 2nd standard deviation. 2nd standard deviation is down here. And you see that. You see the 2nd standard deviation? Look at all these hits. Ba-boom, boom, 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 boom. You see these? Bam. You see those levels, those hits. Let's do this. There we go. Right in there. These are hits on 2. All right? On the 2. And the 2 is right over here, guys. The 2 is right there. All right? So that's the Bollinger Band is the 2nd level, that 2nd standard deviation. Look at all this. Look at the hits into the 4. Look at the hits into the 4. Boom, boom. Look at this additional hit into the 4. Bam, bam, bam. You guys see that? So these are instances when Bitcoin is not just hitting into the 2nd standard deviation. Yeah, so we want to see, okay, how many times? I mean, is it a frequent occurrence that Bitcoin hammers into the 5th standard deviation? We want to know. You guys know that. We got to know. I mean, are people shorting at that level? I mean, they're just going to stack shorts all up above on the 5th standard deviation? You're going to get a really good picture of that. You're going to be able to see, hey, hits up even above, I see. Now, this is where things get kind of interesting. Based on levels of increased volatility, you'll see hits up and above. Hey, looks like people have stacked up to, now this is on the 15-minute severe volatility. You're going to say, well, people have orders waiting at the 6th or 7th level of standard deviation. So depending upon, let me get the price back on here. Depending upon where we're at in terms of cyclical price action, in terms of what is going on, you'll see more or less volatility, but this is going to be a really cool tool for you guys to start to use. Never fully rely upon it, right? And so the digs are just as interesting. Take a look. We've been looking at shorts on the upside, but look at this. Now let me go ahead and switch a setting here. I can change one setting, I believe. Let me see. Price target level, prices on level steps, prices on bands. Let me see. Extreme volatility. There we go. I put on extreme volatility mode. I believe that will add on any additional prices that we need here and bands that we need here. There we go. Now in extreme volatility mode, pay attention. What's up, VIP? Pay attention. Just for the heck of it. Just pay attention. Okay? Say you did, and you can tell me later that you paid attention. Hey, London, I caught that. All right? Might be important. Now, on the extreme volatility mode, we're able to measure, for instance, to the downside, all of the standard deviation drops in and below. And to visually, guys, let's go to the hourly. We're going to have a computation. Just check this out. We're going to have a computation, and the prices are going to be presented. It's going to take a second to load because of we're streaming and doing some high-level calculations, okay? We just are, guys. But looking at this, yes, you're going to be able to see, okay, so this hit the 7th standard deviation. It hit the 7th standard deviation here. But that's maybe kind of an outlier. A few in the past, let's say a few in the past. But man, this 5th level, 1, almost 2, 3, in between 4 and 5. And then look back here. Look back here at this. Look at this, man, that 4 is hitting, it's getting hit again. Man, the 4th standard deviation at the downside is getting hit again. You guys see this? Right, and it's like, wow, man, this 4th standard deviation here, bam, bam, it's getting hit again. Yeah, that's a popular level. Now, what do you do with it? We run into the issue of, first of all, I need to know price at that level. You guys know I need to kind of know price at that level. What's going on right now? What would the 4th or 5th standard deviation be? Yeah, I at least want to know it's an area of interest, right? And then we'll get into some issues in terms of as we work with ZPAC, and we'll be deploying it in a short number of days, guys. I think it's ready today. We're working on the coloring. It's funny, the text editor's working on the website right now for you guys. Just finishing up basic English grammar stuff that the programmers didn't do a great job on. But as we look at right now, this indicator, we're working on the coloring, literally, of the numbers here. That's it. So just some minor refinements, details. And the question as to whether or not it's going to represent, the majority of the time, a reversal at that level, or is it a hit into, let's say a hit into the standard deviation, and it's going to imply some additional price action in that direction. We will get there, all right? We will get there. Just wanted to bring it to your attention in terms of that work on the indicator. And you guys have to know, we all show up, we want the right answer. Hey, we want the right answer in the market. We started off today talking about that. Shout out to the VIP. Hope you guys are doing well. This is London, former hedge fund owner, private, not SEC, not financial advice. We're California. Sun is up in California. Markets are open. Let's take a quick look at the equities overall. Let's just take a look. Let's kind of spread out here just a touch. Shout out to Anthony. Anthony, my man, what's up? I see a picture of you. What's going on? Shout out to Marge and family in Florida. What's up, Marge? Hope you're doing well. Trading, right? Taking a look at some equities, we're a little bit, NASDAQ underperforming. Looks like Microsoft still with some attention. Just FYI, Tesla still with that volatility we've grown to love. You guys know that. Let's see what we got. Bitcoin off 1.24%. Solana 1.47%. ADA at about 0.8. Dogecoin 1.88% down. Matic has been strong. You guys know that. Matic has been pretty tough, right? A lot of volatility. Stay away, guys. A little unpredictable unless you've got a nice pattern for you. Then Matic is something we definitely want to trade. Macro bull flag, let's roll. ETH being a little bit difficult. Nice patterning on ETH if it can make its mind up, right? And Bitcoin dominance, we'll pay a little bit more attention to that here in a moment. Let's look at the DXY. You guys want to look at DXY for a minute? Let's do that. And guys, I decided to stream in the morning because honestly, I'm going to be in the back of VIP. We're going to be catching up on the market, and we'll be able to essentially to chat. We'll be able to sit here and talk a bit. We're working on integrations for video, voice, screen share, etc. So that's all going to be coming to the forefront soon. A number of days. Can we pull the trigger today? I think so. Yeah, if we want to pull the trigger today, we can. Let's take a look at this in terms of the DXY. Let's pay attention to this very quickly. DXY expressed, and let me take some of these Bollinger Bands off. I recommend you guys just to work with standard deviation, add like 4 or 5 instances of the Bollinger Band. Add that all over your chart. Add 4 or 5 instances. Set one up at 1, 2, 3, 4, and 5. Set up separate instances of the Bollinger Band on your chart just to look at things a different way for a minute. Look at how price interacts with levels other than let's say the 2. Other than let's see how it interacts with the third level of standard deviation, guys. The third standard deviation. And I recommend that you guys do that to just introduce yourself to a little bit of a different approach at volatility. Right? If 95% of price action is contained within 2 standard deviations, great. What about the other 5%? Can we trade the other 5%? Yeah, there we go. Add Bollinger Bands on your chart. Set them up very easy under settings and just work with it for a minute. Just expose yourself to the question of, okay, it contains 95% of the price action, the second standard deviation. What about the other 5%? Someone has got to be trading that other 5%, right? So introduce yourself to that equation on your charts, technically speaking, okay? And I'll clear this up just a bit. I have to go to the candle wicks on the DXY, okay? Looking at what we discussed, and there we go. Let me pull this back over and get rid of, there we go. Okay, there we go, DXY. Now, looking at the double bottom, you guys know our blackjack. What do we like? We like the double bottom. We'll call it a blackjack Y. The pattern on the DXY that we're looking at right now. The tip off. Again, people becoming interested under a descending triangle. You guys know this. Blackjack means what? Double bottom, single pass through, 2, 1. Pay attention on your descending triangles. Note such. Is it in the history books of Wall Street, blackjack? No, we just call it blackjack. A little bit of VIP culture. You guys know that. A little bit of VIP culture. Double bottom, single pass through, blackjack. Just start thinking of that because people are targeting to the downside. They just are underneath a descending triangle, typically speaking. So, and we have a bit of a bullish pattern on the DXY. You guys know. Let me see if I can draw this out very quickly. We have this expansion ongoing, right? Now let me see if I can fit all of this. Let me go to a different time frame. Let me go to the 4 hourly here. But we have this expansion, which is not going to be perfectly captured on, let me see which time frame I have it on my side computer. I've got on the hourly, I have a different, bit of a different setup. But looking at the framework here, look at this level of support, interior level of support here. Look at the level of resistance here. This is a bullish pattern we're seeing literally play out, and this was the same thing yesterday, guys, on a broader time frame. Pay attention. How long did this one take to form? What was that, 90 days? 90 days into technically a bullish pattern. You guys are very familiar with these patterns thus far. Bell formation, expanding volatility. You guys got that. And looking at the, let's look at the details here. That's the DXY, all right? Now, digging into the macro versus the micro is going to give us a different picture. You guys know that. But look at this, the 90 days versus where are we at on Bitcoin? On the same pattern dynamic that we're going to focus on because it represents increased volatility. 6 days. We're 6 days into this pattern versus 90 days into it. Now, why would I care about that? Am I ignoring all the other patterns? No. Of course, those are built in. Those are given. Those are given, guys. All the other patterns that you can make out of this, the ones I talked about yesterday, the ones I'll talk about tomorrow, they're built into the equation. Those are the standards. That's the front of the book. That's easy stuff. We'll review it. But as we look at this pattern, it has my attention because it has a higher probability, yes, a higher probability of breaking this line, okay, than your other patterns that you're geared towards talking about. 72% likely of breaking this. You say, like, right now? No. Digging into the micro. Digging into the micro within here, we're on the 4 hourly. Well, you go in the 5 minute, we may find 2 or 3 of these or none, and competing patterns that have a higher probability to the downside. Okay? So as we look at this, the trick is the following. The 72% probability of breaking this line, you guys got that right. Would you want to break the line down here? Would you want to? Why would you want to break the line down there? Let's go there. It's increasing volatility. Okay? So would you want to operate with additional volatility to the downside and the upside? Answer yourself that question. If you could, would you want to operate with increased volatility to the downside with the same 72% probability of breaking the line of resistance? What do you guys think? You guys know the answer to this. Let's just do a simple stack. Let's just simply stack this, okay? Understand the dynamic here. I'm going to do a simple stack. You guys, we can stack it up to here if we want to, okay? But I'm just going to do a simple stack. You guys on Bulkowski, the ones who read Bulkowski, you know this is for purposes of an example only. I'm just going to do a simple stack. That's it. Inverse head and shoulders, etc., may play a part in this as well. So let's do a simple stack in terms of the percentage move to the upside. Now, potentially, we'd be looking at a 4% move. Hey, 4% move, all right. All right. What if we could get this down here? Still with the 72% probability of a breakout to the upside? Look at this. What if we get hit and hammered down into here? All right. If we could hit and hammer down into the level of support and carry up. And yes, I know we need to get there. That's part of the fun, guys. That's part of the market, right? Time. That's one thing that gets you. It's like, man, the time. But then you might be looking, let's just instead of 4%, the way I look at this is, well, that would be nice, 17%. Man, 17%, that'd be a nice trade. That could be over like a 15x. Hey, so as we're looking, and it was great to start off this stream talking about the need for patience in the market, talking about the quick, easy answer crew, right? Where's the hype and the quick, easy answer? We're going up, we're going down. That's the easiest. And good morning, guys, from California. We're here, nice, beautiful day in California. This is London, former hedge fund owner, private, non-SEC, not financial advice. And we got some lighting. The sun's coming up. Don't worry about it, guys. As we look at things, understand there's value at deeper levels. If you're not prepared to operate at different, guys, lower levels to the downside, you are in you're in the category of probably going to not be in the market. You know that? If you're only prepared to operate unidirectionally and you are, it could be up or down, and you don't have a reserve equation in terms of your ability to continue to trade in the instance that you're wrong, right? And you're going to blame it on the influencer. You're going to blame it on whoever told you so, or you got the wrong information. No. I can tell you who you can blame it on would be yourself with showing up to the market. And pay attention. This is very important. Pay attention. Showing up to the market, showing up to an exchange, presenting a profile in terms of a deposit, structuring a trade nearly immediately, unidirectionally, with too much of the account, if not all of the account, placed in that direction. What do you think that looks like to an exchange? I'm just curious, if you were to own an exchange, the profile that you present on an exchange with the deposit, a nearly immediate, within the next 12 to 24 hours, you're really going to think it through, right? You're going to deposit into the typical trader. They're going to deposit into an exchange, right? They're going to really think about this one and take it seriously. They're really going to work on their entries. So it's going to probably take them 12 to 24 hours, don't you think? Understand it's not just a direct line criticism. It is a profile. You got it. It is literally, in terms of a data presentation, it matches the standard of literally nearly every other retail trader. Bulk deposit, bam. Within 12 to 24 hours, bam, overexposed, right? So that's what we need to recognize goes on all across the board. And it's not an insult, it's not a criticism directed to anyone, it's a profile. How do you show up on your profile? Are you prepared to operate at lower levels? VIP are, bottom line, I know that you are. Nice confluence here to the downside in terms of that level of support. And man, if we could just talk about Bitcoin going down all day long and that would mean she'd go up, we'd be happy, huh? We'd be happy campers at VIP, wouldn't we? She doesn't like to be told what to do. I say that all the time to VIP. You know, it's like, you guys would start, like, listen, London, I'll cut you a side check. Just make your videos about going down all the time. Let's see if we can, if we can get it to go up. We got a lot of pressure on Bitcoin because, frankly, the following. We had the FTX, right? We had the FTX. Now, crypto has been leading ETFs, et cetera, on the rebound in 2023. We have this whole notion of short squeeze. We're kind of light on volume, aren't we? So it's like, okay, so you just had the scare of a century. It feels like the scare of a century a short time ago. Everyone's kind of scratching their head with FTX, right? I mean, so the notion here that we're just going to continue to rail up on low volume, I almost feel like there's a little bit of a story that has to get digested and sold to really justify that increase in volume, right? We know the critical levels that need to be beaten, and we know that we're in a bullish pattern right now, without a doubt. So, just looking at the new indicator, let's refocus this morning. Our new indicator will be deploying within a number of hours. You guys have the Bollinger Band to take a look at. You have the Fire and Ice to take a look at. And I'll just tell you guys, I'm excited about deploying this indicator. It's going to be something that you're going to, the more time you have to work with it, some of you guys, listen up, some of you guys are going to come back to me and say, London, you have no idea. That is awesome. That is awesome. Some of you guys will. Not all of you, but some of you will come back and say, man, London, that thing is awesome. Look at what I did. Look at the money I made on this one. Some of you will. Pay attention. Some of you will. Not all of you will. Okay? And it's going to be nice. Let's look at some of the pattern dynamics in here. You guys want to look at some of the pattern dynamics? Now, look at the volatility pattern dynamics on the right-hand side. Pay attention, guys. Brand new indicator. Big deal. Big deal. This ain't it's an RSI. No, guys. This is a volatility, extreme volatility pack. Very, very important. Do you see the flat top resistance, ascending line of support? You guys see this, right? Ascending triangulation. Now, these are measurements of volatility. You don't have this. You don't have it, guys. I'm just telling you, whatever you're looking at or you're referencing, you don't have this measurement of volatility like this. And the kernel capital line equation, you just don't have it. That kernel capital line equation, it's an advanced weighted moving average, a kernel regression, okay? Taking a look at the level of resistance, level of support, we have seen, boom, the return to prior resistance on the ascending triangulation below, okay? And I'm looking forward when I do deploy this. That's a simple example right here. I'm really looking forward to seeing you all spend some time with the patterns in this equation, okay? On this, like the daily is what I'm looking at right now. And pay attention to this. We have a broadening wedge across the top, an expanding, broadening wedge, reverse triangle, right? Very nicely done. If we were to further look into this before, and guys, directionally, price is reacting to these patterns in terms of the volatility. You may also look into here and say, well, that's fine. That expansion is great, but really you got to the expansion how? Pay attention, VIP, this is good stuff. Well, you got to that with a, looks like a bull flag. Okay, so look at the what did we just do? We just deleted it, hold on. So you may look into the volatility equation and say, yeah, but we have a pretty nice look at a bull flag here. And what happened? Bam, bam. Sometimes price will reflect the actual pattern in the volatility. Boom. Sometimes it won't. Sometimes you're going to have an advantage looking at your volatility patterns, and that's one of the most exciting things that I can imagine bringing you guys is kind of another level of insight into the market that is not going to be standardized, guys. It's going to be very advanced, and I'm looking forward to hearing from VIP that, man, I used that indicator and look at this, look what I found. And use Chris as an example. He's a great example for VIP, without a doubt. He's been trading for 15, 20 years. He's VIP. He spent a ton of time in the market. We don't expect to show up. Whoever X, Y, or Z may be, we don't expect to show up. And it's the give it to me now. It's the what can the market do for me today? I'm here, right? Whoa, I've seen those guys come and go, right? You show up and all of a sudden the people who've decided, you guys know this don't be like this. Like someone steps in and I'm in the market. I've arrived. I want the answer. Where's it going? I mean, people get in that mindset. They don't want to put any of the hard work in. They just don't, and it's a real turnoff for me. I'll just tell you that. In terms of the hard work that's been put in over the years, I respect the people who put the hard work in. We put the hard work in, and it's a pleasure to do it because we love the market. You guys know that we love the markets. We're prepared for lower prices. We're happy to deal with a 72% to 28% split on probability and to actually place orders and be prepared for lower prices. We don't want to hand out easy answers. Like, we just don't. And I'm just telling you guys, I go through some of those questions. You don't think I do? I go through some of these questions. We just want to hand out, easy answers and print money, stacks of money. We're building an indicator. You just want to hand it out? Well, at least have people understand volatility. At least have people maybe check with one other indicator, or at least identify one pattern, either here in the volatility or up on top. At least have them do something, right? At least have them check, whether or not there's a divergence. Well, at least do something, right? And part of this equation, and I think you guys can appreciate that. I don't know how you would. You may just say, no, I would just give out money to everybody. If I could, I would just hand out money to everybody. The new guy who comes knock on your door, you're gonna just, here you go, no problem. I need $29.99. You pay $29.99, you go run off and go buy yourself a mansion. Congratulations. The new guy at your door, maybe not. Maybe you want the new guy to show up when he goes and buy the mansion. I don't know. Maybe you want him to have a little bit of understanding of the markets. A little bit of understanding of the markets. You spend, like imagine Chris. He spent, or AJ Crypto's on there. What's up, AJ Crypto? Hope you're doing well. AJ's been in the markets a long time. He's VIP. He's the longest standing VIP member. Hats off. AJ, my man. What's up, brother? What's going on? So as you look at this, understand, you want to know about the markets. That culture, in terms of the development, I got a little bit of a signal going on. Let me see. 4 hour pro lower line is engaging on fire and ice. 4 hour, okay? Pro lower line is engaging on fire and ice, just so that you know that's a key level for us. Yeah, smack dab, boom. So I get a phone call then, right? And you guys know how to do that with Call Hook Pro, etc. Nice move. Let's check on equities real quickly. And our cap line has caught this move well on those lower time frames. Looks like our cap line is dragging a little bit. When I stream and I've got these calculations, and I was going to show you guys the calculations that I have right now are a little bit intensive. Okay, so we're looking at fire sale, 15 minute. That 15 minutes been strong, hasn't it? Almost at the fire sale in the 15 minute. But these guys, we also equipped this specific, and it can get as complicated as you want to on our Z pack. Guys, it's a nice pack, okay? Looking at the, for instance, we just hit a bearish divergence here, a bearish divergence in this zone, and we're flashing technically a bullish divergence now, okay? So we hit a hidden bearish divergence here, but you'll be able to see and filter, and you will choose if you'd like to rely fully on divergences, use them to what extent or not, but they're there, multi-time frame. I brought this to your attention. I'm going to go show cap line only in terms of the capital line. And I called it the capital line for the following, because I want it to be understood that when we are red on a larger time frame, or looking like we're in a transition of white potentially to red, it's red, white, and blue, but that you would have some idea, let's just say some notion that you should maybe need to preserve some capital. Just the idea, not guaranteed, but just, okay, we're in a red zone, which means what? Which means bulls have pulled back in terms of the buying pressure based on volatility to the upside. There's not as much volatility to the upside, so the volatility is dropping, okay? So cap line, capital line, capital management. Don't listen to me. Read New York Institute of Finance. Go read all the greats. Go check into the, go check into the, what would you say? You go check into the business library, business school library near your home, okay? Go do that. Go do all that. But capital management is the capital line. I want to make sure that people at least think about capital. It's all you're doing all day long is placing capital here and there. So if we're in the red, like right here, it's a notion, and this is on the 15 minutes, just a notion. Now, where's my capital right now? Am I so overexposed in a position long that this could hurt, right? Am I going to be able to cope? Now, you get into, okay, well, it's red instead of being long, maybe I would be short here. Maybe I would be short and see if this wants to snake down a bit. And with pattern dynamics in play as well, you'll start to get a good handle. I know guys, you'll start to get a good handle on the different dynamics in play. So let's take a look at, it's been a good talk this morning. Hope you guys are doing well. I love talking to you guys in the morning. With you guys, can't wait. We'll be talking with you guys. Chime, Amazon Chime. We're gonna have ability to talk back and forth. What's up, VIP? I'm excited about that screen share. Anybody in VIP can screen share back and forth. Get on the walkie-talkie, huh? That's a good thing, huh? You guys will be getting on the walkie-talkie. We'll be talking. It'll be nice. We have some great ideas about what we're building in 2023. Shout out to Venus. Hope you're doing well this morning. We're building. I told you guys, we are building. You guys know that, huh? Just talk? No, we're not just talking. Level of support. Orders coming down aggressively to the level of support. Bit of a triangulation. Yeah, bit of a triangulation. Everybody's paying attention to, you betcha, everybody's paying attention to this fan dynamic to the upside. We failed, right? Capital line is probably the best thing to focus on right now. Turning red, inability of buyers, boom, to push back up. I don't like hunting through time frames, looking and fitting your indicator or any indicator into, well, it works on this time frame. The bottom line is you're going to have more consistency and less consistency based upon, let's say, those time frame dynamics that you're looking at. For instance, some it may just take longer to express themselves, like the monthly, right, or the weekly. You may find incredible patterns. We found a nice reversal potential pattern on the monthly that coincided with a summer 2021 reversal for Bitcoin on the weekly. So it was the monthly with the weekly. Yeah. Okay. So some of those patterns can shift and mold in between. Typically, and we're getting a decent amount of downside volatility here as measured by the cap line. What I'm going to do for VIP, since I'm talking about the indicator and you guys don't have it yet, I'm going to eat some breakfast. Remember, VIP, number one thing, we talk about strategy, we talk about skills, who's going to make it or not in the market. VIP, hey, you're going to make it. Excited about 2023. And I'll just say this, eat well, sleep well, and continue to invest in those relationships that you knew were worth investing in before you started investing. That's the kind of talk I like to hear in the markets, huh? Eat well, sleep well, continue to invest in those relationships that you knew were worth investing in before you started investing. And I always tell you, now that you're investing, invest in these relationships. Guys, it's London with VIP. Let's get in the back and let's go trade. We're heading down to a level of support. No big deal. Below such, what do we have? Kind of screaming at the bulls right now. Screaming at the bulls. Just look at this, guys. This specific level of flat bottom support. Paying attention, definitely a level of engagement. And leave it to Bitcoin. She loves to do this, a flat bottom of support with just a touch of a lower demand zone. You guys know that. Few pivots, 1, 2, 3 pivots at a lower level here. Fire and ice, you guys got it. Fire and ice, giving you those, giving you those levels to schedule into as we're looking at the pro line. The reason we call it the pro line, acquisition, green buy line below. Those green buy lines have hit hugely here precedingly. I don't think one has hit and not provided at least some type of trade, even if it's a small trade. We typically see action at these, and I'm excited to deploy this capital line to you guys. Let me go in the back and get the day going. Appreciate you guys letting us talk with you. And what will we say? Anything else to VIP? Is there anything else that we need to talk about? Anything else we need to cover? Only just never be overexposed. Hope you guys had a great morning.